Hello everyone, and welcome back to another video. In today's session, we're going to be looking at some more functionalities of the MT4. We'll be explaining some of the trade orders. We'll be going into some little detail to kind of explain some of the things you can find in terms of the trade orders, what you can do in terms of taking partials. And so it's more or less going to be broken down into several modules. In this particular session, using the slide, I'm going to explain the different types of trade orders that can be taken, the different ways they can be used. And in the live session, when I go over to the MT4, we'll try placing trade using all the different types of orders. So there are types of orders. There are two different types of trade orders, right? The metal trader for trading application or platform gives you the ability to take two different types of trade order. There's an instant execution order, and then there's a pending order. The instant execution order, which we'll explain in a bit, just has one type, while the pending order has four types. So let's first talk about the instant execution order. Now, this is a type of trade execution order that you basically instruct your broker to buy or sell at the current market price. So it's sometimes called market order. So just as the name implies, instant execution. If you place a buy, if you open your MT4 either on your mobile phone or on your desktop device, and you place a buy or a sell, it will trigger at the current market price. That is an instant execution order. Many times you'll be taking trades at the instant execution order, let's say because you look at the markets, based on your analysis, you like where price is, you place your stop loss and take profits, and you execute your trade at the instant execution, so that's the open price. Now, the other type of order is the pending order. Now, this is a type of trade execution order where you instruct your broker to buy or sell a particular instrument at a future price. So let's say the price is currently at, let's say, 1.0, but you'd like to buy at, say, 998, something like that, right? So it's currently 1.0, but you want to buy at 0.9980. Now, you either sit in the front of your chart waiting for price to get there, then you place an instant execution order, or you can place a pending order for whenever the price gets to that level that you're looking at, the order should be triggered. So there are four different types of pending order. There is the buy limit, there's also the sell limit, there's the buy stop, and also the sell stop. So I'm going to explain all of them. We're going to break down the different types of orders and when and where you use them, okay? So the first one is the buy limit order. Now, the buy limit order is a form of pending order where you instruct your broker to execute a buy trade at a future price that is lower than the current price. So if you're trying to place a buy, but you want to enter that position at a price lower than the current price, that is a buy limit order. Right, so that's a buy limit order. Now, there's something before I go further explaining buy limit and other types of pending orders. Pending orders are server side. So what that means is when you place a pending order on your platform, either from your app or from your mobile app or from the laptop or desktop, it is executed. It is transferred over to your brokerage server. That means it stays on the brokerage server. So if you place a buy limit, it stays on ANZO Capita server. And whenever price gets to that particular price point, it triggers your trade, right? So it's server side. Now, the next type of order is the sell limit. Now, the sell limit is a form of a pending order instructing your broker to execute a sell trade at a future higher price. So you're interested in selling the particular instrument, but you want to sell it at a higher price. So let's say the current price is 1.0. You don't want to sell now. You want to sell, let's say, at 1.099. And so you place a pending sell limit so that when price gets to that level, it instantly triggers that order. Now, notice something about the buy limit and the sell limit is you're looking to get in at a future better price. So for example, if you're buying, a better price to buy is a lower price than the current price. So the lower you buy, the better, obviously. Now, if you're selling, the higher you get, the higher you're able to sell, then the better profit you might make. So sell limits and buy limits, you're looking to place a pending order at a future better price. Now, the other type of pending order is a buy stop. And the buy stop is a form of pending order where you basically instruct your broker to place a buy trade at a future higher price. So you're looking at the market and you're trying to get involved, but maybe because you want to see some sort of confirmation. You want to see if price will clear a particular level, and then you say, okay, I want to place a buy, but only if price goes higher than current price. Let's say if price is currently 1.0, but you want to buy at 1.099. So you place a pending buy stop at 1.099. Or when price gets to that level, it triggers your order, you obviously execute your stop loss and take profits as well. So that is buy stop. And the next one is also sell stop. Now, sell stop is a form of pending order where you're instructing your broker to execute a sell trade on an instrument on a future lower price. So you're trying to sell the instrument, but you're trying to do that at a future lower price, and that is sell stop. Now, this is useful where you're maybe waiting for a confirmation. You want to see price break out of a particular range to confirm that it really wants to start going in that direction. And you place this pending sell stop, you place a sell stop order if you're looking to sell at a future lower price. So that's sell stop, buy stop, sell limits, buy limits. So all of these orders are very, very useful, because if not for them, you might like to get involved at a particular price, but you might have to wait until price gets to that level before you even get involved. So pending orders are very useful for you when you're looking to get involved in a trade at a future price. So instead of sitting in front of your chart and waiting for price to get to that level, you just simply place a sell or a pending order, and then when the market gets to that level, it gets triggered. Now, here's one other thing to know about pending orders is you can also set time for cancel. So it's called GTC, that's good till cancel. And what this does is this. Now, sometimes, let me just see if I can use an annotation. Now, you might want to get involved in a trade, right? You might want to get involved in a buy, right? You might want to get involved in a buy trade, right? But at a future lower price, right? Now, in this case, the market might be, this might be so the current price might be somewhere like here, right? And you're looking to buy at a future price, which is down here, right? Now, you can place that pending order, right? You can place that pending order, and when price gets to that level, it triggers. However, sometimes, the market might not get to the level and just keep going up. Now, if you don't close this order, whenever price comes back down here, if the order is still there, it will trigger it, and the conditions you were looking at to get involved in the trade might no longer be valid. So you can set a time limit. So when you place the pending order, you can set, okay, if by the next day, so time, the trade is not triggered, cancel this order. So it's actually quite useful. It's actually quite a very useful tool or function, or at least option to have, so you don't have pending orders I might come and get triggered in 4 or 5 years' time. Okay, so that's actually quite important. Now, the other type of order I want to talk about is the trail stop order. Now, this is also very useful. Now, the trail stop, or sometimes called trailing stop, is a form of client-side order designed to trail your profits when price begins to move in your direction. So basically what I'm saying is this: imagine you get into a position and you get into a buy position, and the price you got into was like 1.0000, right? And you bought, and the price begins to move your way. Right? The price is now moving your way. It has gone, you're now up, let's say 20 pips, and then 50 pips, and then 100 pips, right? Your take profits might be 200 pips away, and your stop loss might be, let's say, 50 pips away, right? Now, the market has gone your direction, 150 pips, only for it to then come back and go and hit your stop loss. Now, you can avoid certain things like this if you have a trailing stop order executed. Now, when you execute a trail stop order on your open position, what it does is it will trail the profits that you've made based on the amount you put. So in that same example that I just used, imagine if you have a position open, it's currently up 100 pips, right? If you trail stop your position at that particular position by 20 pips, so what you would do is the moment price gets to 20 pips, right, it will move your stop loss from where it was to your entry price, so there's no more risk. And then the price goes your way, 40 pips. It will move your stop loss from your entry price to net positive of 20 pips. So it will keep trailing your profits by the amount of, so if it's 20 pips, it's keep trailing by 20 pips, if that's what you set. If you trail it by 50 pips, to keep trailing your profits by 50 pips, right? So that way, if the market begins to reverse, yeah, you might not get your targets, but you would also be able to make some profits from the position because you were right, or you were right in the direction to some extent. Now, there's a right and wrong way to use this. You don't want to now trail 2 pips or 5 pips because you just wouldn't find yourself in any positions. The market doesn't move in a straight line, tends to move in waves. So you want to give it some room to walk and then figure out what exactly works based on the particular trade that you just got involved with. Okay. Now, so that's about it for this session. In the next session, I would go over and would look at the charts, right? We'll look at the MT4. I will try and do this on the mobile version and also on the laptop version. So you can see how you can both place orders, place orders, close orders, place pending orders and instant orders. And then, mind you, I don't think I mentioned it. For trailing stop, it can only be done. It can only be done on a PC. That means it can only be done on your laptop version. You can't trail stop on your mobile phone or your MT4 on your mobile. That's just the way the app is designed. And since it's client side, it means your laptop has to be connected to the internet 24/7, which is why people who are looking to do trading stop, they tend to hook up their accounts to a VPS so their accounts can be connected round the clock, right? So this is a quick session. I hope you enjoyed it. So I'll see you in the next class. Till then, stay safe and cheers. Bye for now.